Hey everyone, welcome back to Corporate Decoder. Today BAM just filed a Form 8K providing an update on their geographic business mix, and I am seeing a clear picture of where their focus is. Quick note, this is not financial advice, just my take on public filings for educational purposes. The biggest takeaway here is how dominant the United States is becoming for Brookfield Asset Management and what that could mean going forward. Alright, so what we have here is a current report, basically an update from Brookfield Asset Management, or BAM as it is often known. The main reason for this filing is to give us more insight into where their business is actually happening around the world, specifically looking at their assets under management and where they're raising money from. Think of assets under management, or AUM for short, as the total value of all the investments Brookfield is managing for its clients. It is like a giant pie, and they're showing us how big each slice is based on where those investments are located. And this report tells us that as of the 30th of June 2026, Brookfield had a massive $1.3 trillion in assets under management. That is a staggering number. But what is really interesting is where that money is coming from. Looking at this table, the United States is by far the biggest piece of the pie, almost half, 49% to be exact. Of their total assets under management are invested in the US that amounts to a whopping $617.3 billion. To put that in perspective, the next largest region is Europe, which is a significant $263.8 billion, but it is less than half of the US amount. Asia Pacific comes in at $159 billion, Canada at $67.3 billion, and then there is a chunk of about $160 billion in other regions. This really highlights how central the US market is to Brookfield's operations. It is not just one of their markets, it is their dominant market. This could mean they have a lot of expertise and relationships built up there, and it also means they're heavily exposed to the US economy and its regulations. Now, the report also looks at where Brookfield is getting the money to invest in the first place. This is about the investors putting their money into Brookfield and Oaktree private funds over the last 12 months leading up to June 2026. And guess what? The US is again the leading source of capital. About 50% of all the money raised for these private funds came from investors in the United States. This is really important because it shows not only where they are investing, but also where the confidence and capital are coming from. Europe accounts for 13%, Asia Pacific for 19%, Canada for 9%, and the rest is from other regions. This information, especially excluding Brookfield's own capital, gives us a clear view of what external investors are thinking and where they are placing their bets. The fact that half of the new capital is coming from the US reinforces the dominance of that market for Brookfield. When we look at the broader context, Brookfield Asset Management, or BAM, is a huge player in financial services and asset management with a market cap of over $86 billion. They've got a solid PE ratio and their stock has been trading in a healthy range over the past year. Recent news shows they're actively buying back shares and have seen strong capital formation. Showing the US as their primary market for both investments and capital raises makes strategic sense given the size and depth of the US financial markets. However, this heavy concentration in one geographic region also presents a risk. If there are significant economic downturns or regulatory changes specifically in the United States, it could have a disproportionately large impact on Brookfield's overall business. It is like having most of your eggs in one very large but potentially volatile basket. For investors, this filing is a signal. It suggests that understanding the US economic and political landscape is crucial for understanding Brookfield's future performance. It also hints that their growth strategy might be heavily tied to continued expansion and success within the American market. My biggest concern is the potential for a US-specific economic shock to significantly impact Brookfield, given how concentrated their assets and capital sources are in that region. What I'm actually looking for is to see if they are diversifying their capital sources or investment destinations more broadly in future reports. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take, stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.